Well, price is king, I think, looking at this scenario. If you look at it in terms of what's happened over the last year, average crude prices have dropped by 21%. We're now down in the $70 a barrel range. That's very uncomfortable for all the OPEC producers, not just the Saudi Arabias and the UAEs of the group. It's the smaller producers who are feeling the pressure quite profoundly in their economies. And they're all looking at the macroeconomic picture at the moment. And there is this persistent word that we hear talking to analysts, talking to economic experts at the moment, and it's the fear of stagflation. And I think that this does play into the OPEC and OPEC plus policy making dialogue that's going on at the moment. What is going to happen with global economies? Our forecast, S&P Global Commodity Insights, through to the end of the year is for about 2.1 million barrels a day of demand growth. And into the third quarter, we expect to see crude trending more towards the $90 a barrel range. And that's primarily because of a lot of seasonal factors, which will become apparent, we think, more into this month as the May stocks data begins to be published.
Andrew, there are a lot of little gems that I want to pick up in what you just said. But first, I just want to go back to a stat that I thought was really interesting in the monthly IEA report, and that Russian production is actually the highest level now since the invasion began. It's pretty remarkable with all of the attempts from the West to curb their oil production. If anything, it's been moving higher and higher. Very interesting stat. But how much downward pressure is that putting on the price of oil here?
But it has to put a tremendous downward pressure on the price of oil. I mean, here's another really interesting stat for you. We did some research at S&P Global Commodity Insights on the volume of dark ship-to-ship transfers that have been happening globally. And we found that there's been a 225% increase over the last year in dark ship-to-ship transfers. This is when tankers are turning off their transponders that allows them to be tracked, and opens up the window for them to obviously transfer crude and for that to essentially get lost in the system. And we estimate that Russia is behind the bulk of this massive increase in ship-to-ship transfers. So I think that you have it there in hard facts that Russia is putting a lot more crude on the market. It's managing to navigate the price cap, and this obviously complicates the situation for OPEC as it's trying to make quotas work for all its members. And it's trying to find a price level that works economically for all producers.
Is there a bit of a rupture going on within OPEC Plus? I mean, clearly, the fact that Russia keep producing more shouldn't be sitting well with the rest of the OPEC members, given that they only just agreed to further supply cuts. But then who is going to police Russia at this point?
It's a good question. I mean, OPEC Plus and OPEC, it's a significant intergovernmental organization in terms of its economic power, arguably the most economically significant intergovernmental body currently operating. That said, each nation acts in its own self-interest and reserves the right to pursue its own policies in terms of oil production. Of course, the UAE, for example, is pushing to produce up to 5 million barrels a day in terms of capacity over the next couple of years. There are issues around its quota and how its quota fits in to OPEC. The amount of oil that OPEC allows its members to produce has always been a thorny issue for the group and has always created tension. If you wind back 10, 15 years, that tension was really between Saudi Arabia and Iran, Venezuela. Now the tension is more around, some of the Gulf producers who are investing heavily to produce more oil. If they can't produce it as a consequence of their OPEC agreement, then that's obviously going to create a lot of tension within the meeting space. How that plays out is going to be an interesting theme over the next 2 years.
Yeah.